What's up, everyone? We're back with another Santiment on-chain and social analysis video. We're going to take a look at the altcoin market today, now that we're a few days into the new year, and markets have been chugging along. There's been a little bit of I guess I should say, one big dip, and outside of that big dip, it's been mostly just gradual climbs for most market caps out there, which is still a healthy sign that we're in a bull cycle. It hasn't come to an end yet, but one thing I like to check out at least a few times a week, if not daily, is this activity matrix model, which is available to anyone who uses Sandbase Pro or is even on a trial. They can check this out and see exactly what the price returns are, and as well as basically divergences on the on-chain side, looking at things like active addresses, whale transactions, social dominance, or even exchange inflow versus outflow. And we look at all that in terms of a color-coded scale where red is generally a good signal that there is more of something that is commonly denoted as bullish, whereas blue is commonly denoted as more of a bearish signal in respect to that particular asset. So each of these boxes here represents a different asset. For example, Aave, you can see it's in light orange, meaning the current day overall is slightly better than average compared to its past 3 months in terms of its on-chain and social health at this very moment. If we look at them individually, the most recent day, which was January 3rd, today is the 4th, but the day is not complete. That's why you see this white row at the bottom, because the day isn't over. When that day is over, you'll see the row filled up. But as of now, we're looking at the most recent day, and we can see that active addresses is above average, network growth is about average, whale transactions is definitely above average. The supply held by whales with anywhere between $100,000 to $1 million, that's about average right now in terms of their accumulation versus dumping. We have social dominance, which is showing that there's definitely more discussion than usual for Aave. Exchange inflow versus outflow. Orange means there is a better, more bullish type of scenario going on right now, meaning there is more outflow than inflow because more coins moving into exchanges is generally a concerning sign. So this is right now the opposite is occurring. And then mean dollar age, this is the sole one that is in blue right now, indicating there is not a lot of dormant activity. And for those of you familiar with the mean dollar age or mean dollar invested age line, when it's just continuing to climb up and that curve isn't going down, that means the age in which coins or investments have been sitting in those addresses are just becoming more and more stagnant at this moment. And then finally, we have age consumed, which is somewhat similar to mean dollar invested age. It's looking slightly better than average, and what it's showing is basically the amount of dormant coins moving, the amount of coins moving addresses multiplied by how old those wallets that are moving the addresses are, if that makes sense. It's kind of a complex equation, but in short, the more age consumed is going on at any given time, the more likely you're going to see a price direction 180, if you will. So on top of that, you can see the price changes overall from left to right. This is the 1-day change, then the 7-day change, then 30-day change, and then 90-day change. And you can see they're colored. So for example, these are all kind of orange and yellow, meaning Aave is kind of an average performer, if not even slightly below average when it's orange, because that's closer to red, obviously, and yellow would be neutral. So 7-day, for example, minus 12% is one of the worst performing prices on that time scale. Whereas if you look at AJO right next to it, you can see it's plus 6% in the past day, 13% in the past 7 days, plus 39% in the past 30 days, and a whopping plus 166% in the past 90 days. And unsurprisingly, they're all kind of yellow-green. You can even kind of hunt down some of the bright green ones like Ethereum Name Service, which has been on a huge tear, particularly over the past week, up 46%. You can see Merit Circle. It looks like that's the best performing one over the past 90 days, up 564%. Injective is still churning like crazy right now, about 5xing in the past 90 days. So you can spot them really well by the color coding that's set up on this model. Now that transitions me over to the leaderboard and what today's topic is going to be about. And we're going to focus on these two categories, active addresses and network growth. And you can see on this leaderboard tab, when you open up your own version of the model, there will be instructions on how to get this model, by the way, in the description. You can see 10 different assets that are doing really well right here for active addresses and for network growth. And then you can see 10 that are not doing too well down here for active addresses and network growth. The rankings next to them are basically the current day out of the past 90 days and where the current day ranks. So if it's a rank 1, that means this most recent day, January 3rd, was the best, highest amount of active addresses for Chromia over the past 90 days. Similarly, you can see that it was also the best day for network growth. They often go hand in hand because new addresses being created, which is what network growth is, makes up such a large proportion of the overall address activity of a given asset. That's why it's such an important, these two together is such an important indicator for you to follow, because they really can predict when prices may break out next. Now, there's two different ways of looking at active addresses and network growth. I like to look at active addresses and network growth as a more bullish signal when prices are actually pretty flat, and then you're starting to see a gradual rise in either or both of these, preferably both of these metrics at the same time. Now, if you see a huge price rise all of a sudden, and then all of a sudden active addresses and network growth are going off, that's actually a tricky one, because it usually indicates that a top is near and FOMO is really heavy, because naturally a bunch of people who have never heard of an asset, Origin protocol, for example, or Stored, some of these that are outside of the top 250, if you suddenly see network growth, it's usually FOMOers who are like, whoa, this coin is up 20% today. I hope it goes up 40%. I'm going to jump along on the ride and hope that I'm catching the train as it goes, as it continues to grow that market cap. So when that happens, those FOMOers buy in, the whales and sharks suddenly put up sell walls and the price tanks. So generally speaking, you want to look at assets that are fairly stable, or at least kind of unsuspecting, not really breaking out of the crop of the altcoin collective assets out there, and suddenly you're seeing lots of utility going on. That's a sign that there could be some big growth coming up. And I put together a few examples of both scenarios. So let's switch over to Sandbase now. And this is all part of your Sandbase Pro membership, should you choose to get one, or open a free trial. You'll see the same things, all of the real-time metrics. And what you can see here is consistent, I guess I should say mildly consistent active addresses here in orange, and mildly growing consistent network activity. But then the price just absolutely explodes. And this is far from consistent. This is actually just a flat out spike. And you see exactly what happened the last time these spikes happened. Huge spike here. This was the biggest in the past 6 months. And it happened right after a big green bar. So naturally, everyone was FOMOing in here. And then suddenly the price retraces. And then it kind of goes dormant for a while. We start seeing a little more growth. Boom. Kind of a mini breakout, but way large address activity spike, and then price retraces. One more time here, price explodes. I guess I can even check between November 18th and 20th. Yeah, price went up about anywhere between 19 to 26%, depending on if you're looking at the close or the high. And then address activity has a huge spike, and then this big red bar punishes all those FOMOers. So I guess one of the differences in this one is that we saw this address activity spike right around the time when the price was kind of going up and down. We could even zoom in a little and take a look at this. Let's switch this to a line really quick, make it super, super granular, 5-minute scale. And yeah, it looks like address activity was growing as the price was rising instead of just a big price spike and then all of a sudden people FOMO in right here. So this was on the same day, and that's why I think it was more apparent that the price could run up a little bit further, which is what it did. It, of course, eventually retraced again. But I'm pretty confident that this type of spike that we're seeing now is pretty similar to those first three that I showed, 1, 2, and 3, where there were, I'm sorry, 1, 2, and 3, where there were immediate retraces afterwards. So nothing is a certainty, of course. There have been many exceptions. Bitcoin could perhaps start to go on a run, and then all altcoins will benefit, and a lot of this analysis may be thrown out the window. But assuming Bitcoin stays kind of flat and just ranges for a while, that's when this kind of metric is so important. Looking at another example, Ethereum name service. Over the last couple of days, this asset has absolutely exploded. It's up another 27% today, up around 50%. I think we just went over that on the activity matrix in the past week. And obviously, we're seeing this huge active address spike with 1,042 unique addresses interacting on the network, 372 new addresses created. That's way above the average. You can see back at in the days to close 2023, it was more like 300 active addresses and 90, 78 new addresses, 85 new addresses. So this is just exploding right now, and it's very obviously due to the price rise. So everyone wants to be in on ENS now. That to me looks like a FOMO signal and potentially a retrace coming up. It may not happen immediately, but if you're playing probabilities, this is what tends to happen. Power is another example. Huge price run up here, and then all of a sudden we have 239 new addresses created when it was more like 29 to 40, like 1/10 of the amount of new addresses being created on the daily basis before this. So that's another sign of a FOMO spike. Look at what happened the last time it happened in late October. Price goes up between October 19th and the 25th. Oh, holding the wrong button. 1 sec. Let's try holding down shift like I'm supposed to instead of caps lock. Yeah, price went up 164%. So everyone's like, all right, time to jump on the power bandwagon. And then all these FOMOers got punished by buying the top and opening new addresses right before this huge retrace happened. So another example of don't get too excited when the address activity and network growth happen all of a sudden. What you want to do is look at things more like this. Now, Anchor here looks more encouraging. You can see constant upswings in daily active addresses and network growth, definitely more than we were seeing back here. And you can actually see how much it's kind of staying with the price. It's not having these huge 10x outlier days of address activity, more just natural, gradual growth. To me, this is a good sign that the network is just organically getting larger and there are more users over time. And I like the look of this a lot more than the previous 3 examples. One more we can look at, Litecoin. Litecoin, by the way, does not have network growth available, but we do have address activity. It's a unique blockchain that is not the same as ERC20s like the previous 4 examples. Regardless, we can see it's doing this thing where it is having big spikes, but they're obviously not related to FOMO because the price has been kind of just ranging and a roller coaster even compared to the rest of the markets. It's actually really underperforming compared to most top 100 assets out there. And yes, it's having a few spikes, but you can still see overall, even on these lower days, there's been a sudden growth in daily active addresses that started right around a month ago, right around December 5th, it looks like. So that to me is a sign that the network is clearly picking up. You can see just how much lower things were throughout July through November. Eventually, I see something new happening. For those who track Litecoin, there was a big halving that happened around here. I think it was July, but don't quote me on that. I don't want to get the wrong date, and I didn't, research that right before this video like I should have. But regardless, I think this is a very interesting signal for Litecoin, showing that the network is becoming much more active than it used to be, especially in the past 30 days. So that's all for today. Keep in mind that this model is available for you if you've got Sandbase Pro or even just trialing Sandbase for the first time. I highly recommend it. Links are in the description. And I hope you enjoyed this video, guys. I'll give more educational metrics in the next few days, so stay tuned for those. And please subscribe if you haven't already. Put on that notification bell as well so you can be alerted as soon as our next video comes out about any sort of big market update. Take care. Talk to you soon.